Hey everyone! As promised, today I'll review another day of high volatility, which left me with a bit over 500 USDT in profits. In the end, the day was in the green, but it is actually unlike any other profitable day for me, and it has more similarities to a recent one where I have lost quite a bit. First, let's see how I tried to apply the lessons of that day. I concluded that setting a very strict order time window might prevent me from even entering the casino, that is Binance nowadays under these circumstances. As if to say, no thanks, I'd rather chill out here in the lobby and wait for things to calm down. And it worked. It worked totally as expected. But was it a desired outcome? Let's see. For about half of my accounts, I set the order time window to half a second. And I brought down the allowable order latency to 1 second, as well as reduced the filter check frequency to 7 seconds. The other half, plus one account that earned the most last time, were left at the old settings of 1.5, 2, and 10 respectively. Well, as expected, the accounts with tighter settings stopped right at the door. Overall, 9 of them produced only 4 trades, totaling just under 6 USDT. Absolutely inconsequential performance. Well, it's much better than minus 660 USDT in 107 trades, of course. Now, let's check out the performance of those 11 accounts that did enter the casino. There we go, 186 trades. That is how big of a difference 1 second makes. Well, actually it's 2 seconds, one from the order time window and the other from the order latency. But anyway, that's still a very impressive effect all across the board, across all accounts with no exceptions. As for the P&L, you see that luck was more on my side this time around. Only 2 accounts were decimated, with a few neutral and many profitable accounts. And with these 2, the difference is quite radical. This one was lucky the first time around, and with exactly the same settings, with exactly the same coins, it got destroyed on the second day. This one is the reverse. Having taken a huge beating before, it has now regained most of the losses, again with the very same settings and coins. This demonstrates that these results on both days are basically completely random, especially with the Bitcoin movement being quite similar on both days. Alright, now these 3 accounts have the very same outcome as before. But these ones have everything reversed with varying degrees of success. Seeing this cluster of profits, one may think that smaller order sizes work better. All are under 2K after all. But that would be a false conclusion, since over here, with basically the same order sizes, we've got completely reversed results. Now looking at individual trades, we see a whole lot of craziness and unexplained phenomena. Even Mulder and Scully would have been scratching their head. I've had stuck open positions resulting in big losses, like this, or this, or this, or this. The list goes on and on. On the other end of the spectrum, I've had positions stuck open resulting in huge profits, like this, or this, or this, or even this. Thankfully, there were more of these than the losses. Then I've had what I could only call nested positions. While one remains stuck, another one is opened right in the middle of it with the very same coin. Then it closes while the first one still keeps being stuck for a while more. And I've got more examples of these. Then I've had this situation with 2 positions open in the very same shot, with one of them being stuck for much longer than the other. These 2 were both takes. And this one has a take and a liquidation. And then I've had all other possible combinations of outcomes. Just take a look at these. Nested takes and stops, we've got plenty. We've got them here, and we've got them here and here. Oh, I especially love this one. Here we have it all. We've got takes, we've got a stop, we've got a liquidation to boot. All in one beautiful package. So what in the world is actually causing this? One such day may be a coincidence, a fluke, but 2 such days feels more like a pattern. Are we really in a casino, or are we actually on a proper, reputable exchange doing precision algorithmic trading? Something is so off that it requires a more in-depth look. And that's where the logs come in. I just have to know what happened. I took these 2 trades as an example. The first one opened here at 143.57 and remained stuck with no take profit and no stop loss for 15 seconds until about 144.12. Meanwhile, another position was opened by the same algorithm in the middle of it all at 144.06 and closed pretty much normally the very next second. Only then, after a few seconds more, did the stop loss for the first position materialize, triggering a loss of 3.7%. And the respective take profit here remained uncancelled for another 10 seconds until 144.22. And that's when the terminal believes the whole trade was completed. Alright, let's see those logs. I'm searching for GMX, the coin, and the timestamp for the first opened position. Right here at 143.57, we see that the position is being opened. The core subscribes to the relevant data source and in the next 2 lines initializes the routine for take profit and for stop loss orders. A few lines down, in about half a second, it tries to place the real take profit order. And here it is saying that it failed to place the real order due to, surprise, server error. The server is currently overloaded. In the next few lines, it reports more trouble due to Binance returning a server error. And here, the routine goes to sleep for 3 seconds before attempting again to re-establish contact with the order. Meanwhile, here at 144.06, we see that the algo initializes a new order, successfully places the real take profit order for the second open position, and the very same second executes a number of partial fills to that take profit order. TPSL algo stopped. Deal complete. Excellent. But what about that first stuck position? Well, you can see a lot of error messages highlighted in red, where it says server error. The server is currently overloaded with other requests. Please try again in a few minutes. Well, in a few minutes, huh? Really, Binance? Thanks a lot. The price could be anywhere at that point. Alongside that, we see other errors saying order does not exist. This is a well-established sign of high latency. It is even in the title of the page that tracks various kinds of Binance latencies. The core lost contact, and there's nothing it can do until Binance returns the real status of the order instead of this error. Which did eventually happen, and here you can see the lines that indicate partial fills of the stop loss order as soon as it was allowed to be placed. And the logs for that particular time period are heavily sprinkled with server errors and order does not exist errors. That's the reality. My initial guesses have now been fully confirmed by the logs. There's nothing Moontrader could have done when the exchange keeps returning error after error, except try and try again with no visibility whatsoever of what happens to the price while Binance remains incommunicado. As a cherry on top, here's just one more piece of statistics. In the previous 8 months of trading, I've had 28 liquidations in total on high Bitcoin. Now here, in just these 2 days, I've had 31 of them. That's no way to live and no way to trade. So what in the world should I do about this? There's absolutely no guarantee that this won't happen again. For one, I could completely tune out of this whole thing. Set very low allowable latencies and not gamble, exactly like I did with those 9 accounts. Instead, go and refocus on low Bitcoin volatility, where the latency issues are so much less likely, and it's definitely more control over there. But then, what's the point? Another approach would be to try and make some special high latency algos that can allow more room for this type of behavior. Let's say at low latency, we've got my existing precise algos running, but as soon as the latency exceeds the values that these are designed for, we switch over to more broad and less precise algos. Pro-gambler algos, if you will. I'm just throwing ideas around here at this point. Maybe they should have obnoxious distances, like 4, 5, 6, 10%, why not? Maybe they should have bigger stops to allow for more price fluctuation during the communication outage. Maybe at lower distances, they should have smaller order sizes to limit the potential losses, but at the same time, crazier takes to compensate for it. I have to try and figure this out for real. But for right now, I've stopped all trading. There's no show me the money today. There's nothing to show. I want to take a breath. I want to put this setback behind me, and then I want to start over with this new information and this new experience. So, what have we learned today? This one's gonna be quick. Number 1, use core logs to confirm your suspicions. Previously, I had an educated guess, but now I know for sure what happened. And number 2, when a new type of scenario arises, there's a choice to be made. Do I avoid this all like the plague, or do I figure out exactly what it looks like and how I could take advantage of it? I have yet to make this choice. Thank you for spending this time with me and listening to what I have to say. I will see you next time.